Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday, the 5th of February 2020. And yesterday we published our video entitled Markets Regain Most Losses, Then Gold and Silver Fall. And on Monday we produced a video entitled China Markets Face Largest Fall in 4 Years. Two videos showing stock market falls and then a reasonable recovery the following day. And if you haven't had the opportunity to listen to them, we've placed links in the description box below. Now, we promised to update members and subscribers as to why this happened. And we also provided our views on the economic data that had, until then, been published, including a positive ISM manufacturing index, some 3% higher than December. And factory orders also increased 1.8% in December, the largest gain in 18 months. Now, before we continue, it's worth noting this morning that European stocks are up again by an average of 0.75% to 1.3%, and Asian Pacific stocks are also up by a similar measure. So what has helped cause this to happen? Well, we shall read two Bloomberg articles published this morning. Bloomberg article dated 5th of February 2020, entitled Euro Area Economy began 2020 with unexpectedly strong pickup. The euro area's private sector expanded at a faster than anticipated pace in January, providing a foundation for economic growth to accelerate in the course of the year. A composite purchasing managers index rose to 51.3, the highest level since August, and above an initial estimate. The pickup was led by sound momentum in services and helped by dissipating woes in manufacturing. The data point to easing concerns that persistent weakness in industry could damp domestic demand, which has remained robust thanks largely to a healthy labour market. While companies across the region still face several headwinds, confidence about the next 12 months jumped to the highest level since September 2018. Quote, manufacturing is showing welcome signs of stabilising after the heavy downturn seen last year, and services growth remains encouragingly resilient, unquote, said Chris Williamson, an economist at IHS Markit, which published the report. We expect to see growth gaining momentum steadily as 2020 proceeds. Williamson added that although trade tensions between the United States and China have cooled, reducing a major risk that weighed on global growth last year, Europe appears to have become a new target of President Donald Trump's rhetoric. The automotive sector could be particularly vulnerable to tariff threats. Trade discussions with the United Kingdom could also add to business uncertainty as the year progresses, he said, just as the outbreak of a coronavirus in China threatens to disrupt global business. Quote, we consequently expect the Eurozone to avoid recession in 2020, but to struggle to muster growth of 1%, unquote, Williamson said. End of article. Bloomberg article, dated February 4th, 2020, updated February 5th, 2020, by Todd White, entitled, Europe Stocks Gain with US Futures. Bonds Fall. Markets Wrap. European equities turned higher with US index futures and Asian shares on hopes for a breakthrough in the fighting of the coronavirus, and as investors digested the latest corporate earnings. Treasuries reversed earlier gains. The Stoxx Europe 600 index rebounded alongside contracts on the three main American gauges after a string of reports on possible vaccines and treatments for the deadly Wuhan virus. Gains in tech and travel shares were supported by PMI readings that suggested the euro area economy began 2020 on an unexpectedly strong note. Asian equities notched the first back-to-back daily gain in 2 weeks, even as Hong Kong quarantined 3,600 cruise passengers and crew after discovering coronavirus patients had boarded the ships earlier. Crude oil remained in the green in New York trading, heading for the first rise in 6 sessions. The dollar erased an advance against its major peers. Investors are weighing their optimism from earlier this week alongside the latest reports on containing the virus and corporate warnings about its impact. United Airlines and American Airlines both suspended flights to Hong Kong for a time due to a drop in demand. That city's stocks pared gains after a report on potential new curbs to contain the virus. Sky News reported early Wednesday that UK scientists have made significant progress in a vaccine for the virus. Chinese researchers have applied for a local patent on an experimental Gilead Sciences Inc. drug that they believe might fight the pathogen. Quote, against a somewhat improved backdrop, markets appear healthier this morning, unquote, said Nema Ramkelalawan Barna, an analyst at First Strand Bank Limited in Johannesburg. Quote, investors appear less fearful of the secondary effects of the virus despite travel restrictions still being in place, suggesting that, though harmful, the impact on the global economy will be short-lived, unquote. Elsewhere, Thailand's baht slid after policymakers there cut interest rates, and Singapore's dollar fell after the city's central bank said there was room for easing. Tesla Inc.'s stock continued to surge after its quarterly earnings, helping some related firms in Asia. One China supplier climbed by the 10% limit for a second day, Wednesday, helping the Chi-Next index recoup post-Lunar New Year losses. End of article. So, the signs for the European Union economy appears, at least, to be better than expected or anticipated, though we are aware, very much aware, that this to a large extent is achieved as a result of considerable easing of monetary policy and what many may understand to be quantitative easing. We have often said on this channel not to believe those stating that the economies of the world are on the verge of collapse. Under traditional economic models, those doomsayers would probably be right by now, because economies were traditionally quite independent, to a large degree operated within some degree of isolation financially, and had to rely just on their own resources. But today's global economy and global financial system, and that's the important bit, love it or hate it, adds an additional layer of protection and financial support. Even if this system eventually fails because that support eventually outgrows its own ability to finance it without hyperinflation occurring, that time period can last for many more years than many people think. And it does appear at this stage that 2020, being the year of economic collapse as predicted by so many, may yet still prove those pundits wrong. And it is just possible that the day of reckoning could still be a few years off. But rest assured, when we get real signs of it breaking down, we will advise accordingly. Now, we started writing this podcast this morning, but we're completing it at 1600 GMT. So what we can report, in addition to what we started this podcast with, is that gold has recovered a little by $5 to $1,557, and silver has risen 6 cents so far today to $17.63. Wall Street is currently up, with the Dow up another 200 points and surpassing the 29,000 level once again at 29,031, and other exchanges are rising or holding firm. The dollar index has again risen further and stands at 98.22, and the ADP employment report for January is showing a considerable rise, together with a quite reasonable rise via the market services PMI, and even the ISM non-manufacturing index has surpassed estimates, albeit marginally at 55.5%. Now, of course, Friday is the biggest day of the week for data, with the non-farm payrolls report coming out. But if the ADP employment report is anything to go by, one could conclude that the non-farm payrolls will once again provide a very attractive employment position for the United States. So, until tomorrow, Thank you so much for listening. If you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. And once again, we're putting this at the end of each of our videos, so if you've already heard it on a previous one, by all means ignore it. We've also carried out an experiment by creating 2 new channels. The first is mainly for Trump supporters or those who are interested in Trump's progress during the 2020 election. And the second channel is broadly a 10-minute discussion that I will have with controversially Greg on a regular basis on subjects outside of the gold and silver arena. We're also going to introduce a number of changes to the channel over the coming weeks and beefing up the services we're offering to Inner Sanctum members. So with this in mind, we shall be using the side channels for those areas of interest which not all of our Illuminati Silver members appreciate, and therefore do not need to tune in. So, we ask that if you are interested in Trump 2020 and Greg and I discussing non-precious metal or economic issues in the main, then please click on the links at the top of the description box below, or those I've placed as the lead comment to this video. We anticipate approximately 3 videos a week appearing on each of those side channels. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.